Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. Markets this week were very turbulent as Wall Street digested lots of news, including last week's drop in emerging markets currency. On Monday, the Commerce Department said sales of new U.S. single-family homes fell 7% to 414,000 units in December. This was lower than analysts' expectations. Durable goods orders fell 4.3% for December, considerably below expectations, pointing to a possible loss of momentum in the manufacturing recovery. One thing that didn't weaken was the Case-Shiller home price index, up 13.7% year over year for November. Consumer confidence also increased to 80.7 for December, up from 77.5 and stronger than expected. On Wednesday, the Fed announced they would continue tapering bond purchases another $10 billion monthly starting in February, lowering the total purchase amount to $65 billion per month. Although the decision was expected, markets dropped on the news. On Thursday, the fourth quarter GDP was released and it showed the economy grew at 3.2%, down from third quarter's 4.1% rate. This, along with some upbeat earnings news from Facebook, sparked a rally. Jobless claims for the week ending January 25th came in higher than expected at 348,000, up 19,000. On Friday, the Commerce Department said that personal income remained unchanged for December, while consumer spending rose 0.4%. However, the emerging market worries, along with some companies reporting lower earnings guidance, contributed to a substantial opening drop. Now let's take a look at some stocks. Facebook announced impressive third quarter earnings with a 63% increase in the company's fourth quarter revenue from $1.59 billion to $2.59 billion year over year. Most notable was that Facebook's mobile advertising revenue increased from 23% of all advertising revenue to 53% compared to a year ago. Analysts raised the company's price target from 60 to 66 after the earnings release, while Facebook stock gained nearly 16% during Thursday's trading. Apple announced their first quarter fiscal 2014 earnings, reporting an increase in revenue from $54.5 billion to $57.6 billion, while net profit increased from $13.81 to $14.50 per diluted share. However, Apple also stated that they expect second quarter revenue to be between $42 billion and $44 billion, which fell short of analyst projections of a little over $46 billion. Apple slumped more than 7% during Tuesday's trading. Yahoo released their fourth quarter earnings and reported a year-over-year increase of 28% in net earnings from $272 million to $348 million, beating analyst projections. However, the company also said their display ad revenue fell 6% year over year, and this was during the heavy advertising period of the holiday season. This brought major pressure to the stock during Wednesday's trading, and it lost nearly 9% in value. Caterpillar announced their year-end financials, reporting that company revenue experienced a 3% increase to $2.78 billion compared to a year ago. CAT's fourth quarter earnings were able to offset their third quarter slump attributed to lower demand for mining equipment. The year-end result offered a positive projection for the upcoming 2014 year, leading to a slight gain in the stock during Tuesday's trading. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.